Okay, Chapter 3, Example 16a. We have the Vulcan Company, and they are a monthly depositor whose tax liability for March is $2,505. So the first thing it wants us to do is to calculate what is the due date for the deposit of these taxes. Well, you have until the following month on the 15th. So they're going to have until April 15th to file these taxes. Okay? So then it says, let's assume that they don't file their taxes until May 3rd. So we're going to compute all the penalties are going to be acquired because of that. And we're going to assume a 365-day year computation. So the first thing we're looking at is a penalty for failure to make a timely deposit. So you have, if you don't pay on time, you have to pay a penalty just for not doing it on time. Then you have to pay a penalty for not fully paying the tax. Then you have to pay a penalty of interest on the tax that was due but is not paid. Okay, so lots of taxes they get you with there. So let's take a look at our calculator. So the first one is going to be 10% of the amount of taxes due. So we have 2,505. It said was our tax liability times 0.1 for our 10%. So we have $250.50 as our first penalty. Then penalty to or failure to fully pay tax is another 0.5%. So we're going to take 2,505, not minus, times 0.5%. Well, it's 0.005. Sorry, I put that in wrong. So 2,505 times 0.005. Oh, it's going in. 2,505 times 0.005. Okay, let's clear this. 2,505 times 0.005. Okay, $12.53. Then the interest, we have to pay 3% in interest for every day that it's late. Okay, so we'll go back to our tools again. Basic calculator, so we have the 2,505 as our tax liability times our 0.03%, but that would be for a whole year. Percentages are an annual percentage basis, so we need to figure that based on 18 out of 365 days. So we'll take that times the 18 days and then divide by the 365 total days, and we get $3.71 as our interest liability. Then we add all those together and we get a total tax penalty imposed by paying 18 days late of $266.74.